Hello, and welcome back. In this video, we're gonna be discussing about NIO, the well-known automobiles company, auto company. So they're selling electronic vehicles for the most part. And this company has been growing insanely over the past couple of years, as you can see over here. And I want to examine the financials of the company because it could potentially be interesting to some people, especially now that it closed 11% down last Friday, and that's not necessarily indicative of NIO itself. I mean, the whole market kind of tumbled that day, so doesn't necessarily say much about NIO itself. I will try to make this video shorter than before. My videos tended to be a little bit, I guess, a little bit too lengthy on these topics. So from now on, I'm gonna try to keep it about like 10 to 12 minutes. So let's move on. Let's examine the income statement of the company. And the first thing that you see here is that the total revenue of the company from 2017 to 2020 seems to be growing and growing nicely. So they are making money from their operations actually, which is nice to see. And they started having a little bit of profit that they keep. So from 16 billion profit, they actually keep about 2 billion. However, their operating expenses are growing massively as well. So as you see here, it was like 5 billion, 14.45 billion, almost 19, and 21 almost here. And so this means that basically their operating income and especially their net income, which is the bottom line basically, is on the negative. So they're actually losing billions of dollars every year basically. And at some point they lost even 23 billion here, then 11 billion, and now 5 billion. So they're steadily losing money, less it looks like right now, but still losing money. Let's take a look at the balance sheet. So remember that it grows from 2017 going to 220 here. And so the current assets here is like 8 billion, 12 billion, and 5 billion. But over here it's 46 billion, which is not to be expected. So something happened and they really grew their assets basically. And we need to discover what that was. We will discover that in the cash flow statement, where we can actually see how money went into the company, basically. And the non-current assets, kind of similar here, 6.6, 9.6, 8.4. That's to be expected. But the total assets right now is 44.6 billion for 2020, actually. And again, we need to examine why it went that high when the previous year was like 14 billion. Liabilities growing as well. They grew massively from 2017 to 2018, but that can happen with growing companies. That's not necessarily a cause for concern, really. And you're seeing retained earnings in the negative, basically indicating that the company cannot really accumulate money, which is not a great thing to see. But the total equity here, 8 billion, 6 billion, minus 6 billion, so starting to lose a lot of money here. But the cash injection that came in brought the total equity to 27 billion. However, it looks like the company is wasting a lot of money, is losing a lot of money right now. So cash flow from operating activities over here, as we're going to the cash flow statement basically. The cash flow from operating activities is for 2017 4.5 billion. 8 billion and 8.7 billion, and then 2 billions in the black over here. So they started growing over here and actually making some cash flow from operations, which is nice to see. That's always a positive sign when you're seeing pluses over here. Hopefully they can continue doing that. Now, the cash flow from investing activities and financing activities is missing here. So, as usual, I tend to look at, so I have it over here in the cash flow statement. You can actually see over here that the operating cash flows that we discussed earlier, and the investing cash flows are in the negative, meaning that the company invests, which is nice. But you will see here what we were looking at, we were looking for earlier, this $41 billion cash injection in 2020. And if you take a look at the financing cash flow, basically over here, you will see the reason. It's the common stock issuance. So it's basically funded by stock by investors basically right now. And this cash injection came from investors basically, which is not great to see, because you kind of want to see companies that fund themselves. But you know, if they can fund themselves, that's nice, and they still get some cash injections, that's fine. But if they're losing money with and they are, you know, they're just using investors' money to stay afloat, that's not a great thing. And the change in cash over here, yeah, of course you would expect that, just again because of the cash injection. However, the free cash flow, which is important because it's basically the money that comes in from operations minus the company expenses, basically the capital expenses, is over here in the negatives, but over here it started growing and becoming positive basically, which is nice to see. And so I wanted to find the capital expenditure here basically. Actually, I think I was looking at this one, which is better. Yeah, the capital expenditure. So in order to, if you want to calculate the cash flow, basically you can look at the operating income minus the capital expenditure, basically for that certain period, in order to calculate on your own if you want. But you can kind of see that the free cash flow over here has been in the negative, and then has grown towards the last month, the last year, basically. That was 2020 actually that we're looking at. And over here you see, yeah, the analyst recommendation is a buy, but that's why we're analyzing ourselves. And the other thing that I wanted to examine quickly is the debt to equity ratio, which is surprisingly kind of low still. I expected it to be higher, to tell you the truth. But the company doesn't have a lot of debt, which is nice to see. And it's kind of promising. I mean, I wouldn't expect them to start having financial issues anytime soon. So it may be an interesting stock to hold, at least for the short term, really. Now, as we're approaching the end of the video, again, as I mentioned, I wanted to make those slightly shorter. We want to understand whether it would be a good idea to potentially buy, and of course this is my own opinion, and you can have your own opinions based on what you saw over here, of course. But if I were to think about myself, I probably wouldn't really buy NIO right now, but I would be on the fence. Like, I would be waiting on it potentially. Like, if it goes down a little bit, it may become a more interesting proposition. But I would probably like to see it near like the $20 range for it to make sense for me in order to accept the risk. Because there is risk, as you saw. The company seems to be losing money right now. It's a growth company. It can happen. And it's also a car company. That's another a little bit of a concerning thing. There's lots and lots of competition. And so I don't know how, and the margins tend to not be great as well in car companies. So I don't know how well they will be doing in the future. It seems mostly like a meme play at the moment. But maybe they will be selling a lot. Who knows? And maybe they will continue growing nicely. So it's definitely interesting. Again, as I mentioned, I would probably wait on it. I wouldn't buy it right now. I think it may go lower actually, and maybe it can give some potential benefit towards risk, basically, ratio. If you think about it a little bit later, if it goes down, maybe it's a potentially good play, at least for a short-term period. I would be a little bit worried holding this for more than a couple of years personally. Who knows? Maybe it will do well. Let me know of your opinion. Would you buy NIO? Do you own NIO currently? What do you think about it? Will it continue growing? Will it grow more? Will it surpass the car companies and Tesla? So let me know what you think, guys. And thank you for watching this. Bye bye.